Hey, everybody. Good morning. This is Roman Polnar coming to you live this morning from Pillar 6 College Planning. And I'm just getting set up, waiting for some folks to arrive. And today we're going to talk about the new FAFSA. We're going to talk about some of the changes that you may or may not be familiar with, but a lot of folks are really confused about the timeline because the Department of Education just came out and announced that there are going to be delays in the new FAFSA. There are a lot of changes that have been proposed, and instead of them all coming online next year, as was planned, the Department of Education is, well, running behind. And that's in part because they just, I think, didn't realize early on when they were making all of these changes, or at least proposing these changes and writing them into law, that there were going to be so many back end systems that would need to be updated, upgraded, and changed in order to facilitate all those changes actually going live. And so, anyways, it's been, I guess, more challenging for them to do than they initially thought. And that's why there are delays to the new FAFSA. And over the last few weeks, maybe even longer than that, I've been not only doing these updates online here, sharing them with you, but we've also been sending a lot of email updates to our mailing list, both those that are clients, friends, and generally folks who are just learning about the college planning process, the financial aid process. And so this is part of, let's call it a community uh, service announcement, right? Because there are really, really big fundamental changes that are coming to the financial aid universe. And so if you have a college bound student who is, well, at this point is as young as a incoming freshman, high school freshman, these changes are going to affect you. And they're also going to affect every other family, including the sophomores, the juniors, even the seniors, the rising seniors that are starting their senior year of high school in 2021 are going to be affected. And you really need to know what these changes are and when they're going to go live, because if you've been learning about the financial aid system, if you've been learning about the FAFSA, well, you're going to have to unlearn a lot of these things because the rules are changing. And there's no sense operating by the old standards because, well, they won't work anymore. So before I begin, let me just state this for the record, that this particular episode is for families that are looking or will be looking for need-based financial aid. What that means is that your student's going to college, it's going to cost you some money, and you don't have that money saved in the bank. And maybe you can't pay it out of income. So you're going to need to get money from the financial aid system in order to help you pay for college and bridge whatever affordability gap there may be for you and your family, as well as your student. And the main goal is to just avoid having to take on a lot of debt. In fact, if you could follow everything through, you shouldn't take any debt. Like, your kids should be able to graduate college debt free. And you as a parent should not wreck your finances, nor should you go into debt in financing their education. A lot of families also dip into retirement, or they don't save for retirement because they don't have enough money to do both things, to pay for college and save for retirement. And this is one of the things that I keep saying over and over, is that there is financial aid for college. There is no financial aid for retirement. So you got to, in this case, go against your parental instincts and take care of yourself first. Put on that oxygen mask on yourself first. Let me help you figure out how to pay for your kids' college using the financial aid system, not the savings that you cannot part with. All right. So with that in mind, this episode is specifically for those families that will be looking for need-based financial aid from the financial aid system. And I'm going to teach you how to navigate these changes so that you can get the money that you need and see your kids through college without debt. So without further ado, I'm going to get started. If you have any questions while you're watching this, feel free to drop them in the comments below. And if this is helpful to you, let us know. Hit like, let me know and share with other folks that may be in the same boat as you are. So I'm going to bring on my slide. I'm going to go off camera and let's go through them one by one. So first and foremost, this is sponsored by Pillar 6 College Planning. This is where we do a lot of financial aid advising and helping families get prepared for college and pay for it without getting stressed financially and without going deep into debt. My name is Roman Polnar. I'm a financial aid coach. I've also been a financial planner and advisor for the last 20 years. So all of this is really designed to help connect the dots in your personal finances. So without further ado, let's jump in and talk about something called the FAFSA Simplification Act. For those of you who are not familiar, this was a big change to our financial aid system that was made part of the most recent coronavirus relief bill that was passed on December 27th of 2020. It was part of this Consolidated Appropriations Act, which was something like 3,000 pages long, and the FAFSA Simplification Act was part of it. I think there were about 168 pages, if I remember that correctly, and I've highlighted the four biggest changes there for you in the second bullet point. Now, number one, there's changes in the federal student aid and the loan program. The whole financial aid program is being expanded. The FAFSA, which is also the most important financial aid form, is being simplified. And then the third biggest change is that the government is making some changes to determine whether you are in need of financial aid. I'm going to talk about them because they're very, very, very important. And then the fourth biggest change is just some of the policies and the procedures. Well, it's because of that fourth bullet point that there are going to be the delays. So initially, when these rules were they were proposed rules that were signed into law on December 27th of last year, they were supposed to roll out October 1st of 2022, next year. So the government had about a year and a half or so, maybe close to 2 years, to put all of these changes into the system. And the new FAFSA was going to work for students entering or starting college in 2023. So what that means is any high school sophomore today will have to complete the new form. Well, because of those policies and procedures being a little bit more complex, the government missed the deadline and they decided to push off the final implementation of the new FAFSA until 2 years from now. And basically, high school freshmen are going to fill out the new FAFSA. So if you've got a high school freshman and you're listening to this now, pay attention. Same is true if you've got a sophomore, especially juniors and seniors, because you're going to have to do some of the FAFSA filings under the current rules. And the last 2 years of college, you're going to have to use the new FAFSA. So these are very, very important changes. So let's go through them really quick. The five biggest changes that I'm going to talk about today is, number one, we're going to talk about the expansion of the federal aid. And this has a lot of benefits for the lower and mid-income families because you're going to be able to access more money. The second change is also very positive for most families because the FAFSA is going to be shorter and it's going to be simpler to complete. Now, it's worth mentioning that in the last several years, the government has had over $2 billion of financial aid left unclaimed year after year. And the biggest reason they discovered is because a lot of the lower income families just didn't complete the FAFSA, or they completed the FAFSA incorrectly and effectively disqualified themselves from money that they could have gotten. So that was the big effort to simplify the FAFSA, to make it more approachable and easier to complete for families, especially those that don't necessarily have the means to get a lot of help. The third change is that the EFC, where the expected family contribution, is being replaced by another term. It's going to be called the Student Aid Index, or SAI. I'm going to talk about what that means for you. In the fourth part of this episode, we'll talk about who are the winners And unfortunately, who are the losers of these proposed changes? Because unfortunately, the field is getting divided. There will be some families clearly winning, and some, unfortunately, are not going to do so well. And then lastly, we'll talk about the rollout schedule, because instead of all of these changes going online in 2022, like I mentioned earlier, well, that's changing. And instead, these changes are going to be phased in year over year until they're fully implemented in 2024 to 2025 school year. And that's assuming, of course, the Department of Education doesn't give us any further delays. So let's jump in and let's talk about bullet point number one, which is the expanded financial aid. So the number one thing you want to know is that the Pell Grant will now be available to more people. If you're not sure what Pell Grant is, just Google it. It's a great federal government program, especially for low and very low income families, to provide them with a grant, which is free money to help their kids go to college. Well, the biggest change, well, three changes that are taking place to the Pell Grant is number one, if a student was previously incarcerated or has a juvenile criminal record, can now qualify for the Pell Grant, or at least I should say, will qualify for the Pell Grant, because under the current rules, if someone answers affirmatively that they have been incarcerated or that they have had a juvenile record, they might not be able to claim any federal assistance to go to college. That's going away. Now, the second big part of that is also expansion of the Pell Grant for low-income families and those families living below the poverty line. So again, you can look at these changes online, but these are very, very positives because they're going to help kids that had a rough start be able to go to college. And then the third big benefit is that now you're going to be eligible to get the Pell Grant or get it restored if the school that you were going to was closed. This unfortunately has happened because of the coronavirus pandemic. Several schools, and actually at this point could be a lot of schools, they closed and they just couldn't continue operating. And so if a student was receiving a Pell Grant, they might lose eligibility going forward. And under these new proposed changes that have been signed into law, but not yet implemented, if your school closed, you will still be able to get your Pell Grant reinstated. And the same thing is true if a college misled you in any way. And unfortunately, there have been a few, especially for-profit colleges, that weren't operating above board. And so if you were affected by one of those schools, you'll be still able to get your Pell Grant. This is 2 thumbs up, definite positive, big win. The second big change is there's going to be an expansion to federal loans. All right, this is a tough one for me because on one hand, it's a benefit, right? Easier to get more debt, easier to get more student loans, parent loans. All right, on one hand, that's good. On the other hand, it's terrible. The main reason why colleges are able to continue raising their prices as much as they have is because the government continues to give out easy to get loans. And I think that this is part of a vicious cycle that we need to end. We're not going to solve or even tackle that problem in this episode. You can find me in other videos where I rant about this because it's truly horrible. You know, colleges have been able to increase their prices 170% in the last 20, 23, 25 years. Show me one person that you know whose income has gone up close to 200% in the last 20 years. Not many. In fact, most people have not. So it's very, very difficult for families to actually afford these incredibly, incredibly high cost colleges. And so the government just continues to expand their loan programs, letting you borrow more money. And in a way, colleges don't really care where the money comes from. They don't care if it's affordable to you or if you're going to be stuck with debt for the next 20 years after graduating college. They're going to continue raising prices. So try to avoid loans if you can. But if you are going to borrow, these are two very important things. Number one, there's going to be this repeal of this what's called lifetime limit or subsidized usage limit. Now, this is a confusing thing that I'll mention briefly. It basically means that if you have, or if you're pursuing a 4-year degree, then you have 6 years, right, to go to college and borrow for college from the federal government. That's the 150% of your program. 100% of a 4-year program would be 4 years. 150% of a 4-year program is 6 years. Same thing is true if you're going after a 2-year associate degree. You'll have 3 years over which to complete that program and have access to federal debt. Same thing for 1-year certificate, you have 1.5-year limit. Well, with the new changes, this is all going away. And what that's going to do is, well, if it takes you 5, 6, or 7 years to complete the bachelor's degree, or if you take a break and then go back to complete the degree, you'll have ongoing access to the federal government loan system without being limited by these prior limits. And the third expansion to financial aid is that the government is actually removing the disqualification for any drug convictions. There's a question on the FAFSA that asks if you have a drug conviction. Now, when I say you, I mean your student, because at the end of the day, it's the student applying for financial aid. And if you said yes, or if your student said yes, well, they wouldn't be eligible for financial aid from the federal government. Now that's going away. So even if a student answers affirmatively to having had a drug conviction, they will still be able to access the federal financial aid system. Now, one thing I want to tell you is that even though the new FAFSA has not been changed, we'll talk about that more in a moment, this rule is already being written into effect. So as of right now, if you have a rising senior that has a drug conviction on their record, the question will still appear on the FAFSA. But even if you answer yes, it will not disqualify your student from financial aid. In the future, when they completely revamp the FAFSA form, that question probably won't even be there. And then the second thing, which is really positive for a lot of families, is that the new FAFSA will remove the requirement for male students to register with the selective service system. What that means is, in the past, as of this year, everybody completing the FAFSA, especially male students, would automatically be signed up for selective service. And a lot of families had problems with that. They said, well, what if there's going to be another war that we're going to be involved with? What if the government decides to have a draft? Well, if your student applies and receives federal financial aid, they're automatically required to register. And if the Army decides to draft them, theoretically they could. Now, in all practical terms, we haven't had a draft for many, many years. It's not likely that our current administration or any administration that I can think of in recent past would have a draft, but it's possible. Well, with the new FAFSA, that's being removed. So now both male and female students can apply for federal financial aid and not worry about having to be automatically registered with our government military. All right, let's talk about the simpler FAFSA form. Now, this is a very big positive, I think, and it's a win for everybody. As of right now, the FAFSA is about 108 questions long. Now, that's all questions if you had to answer everybody or every one of them. Most people don't have to. It's a logical form. It used to be on paper. I don't think anybody completes it on paper anymore. It's now all online, and it has certain logic built into the question. So depending on your prior answers, the next set of questions will appear. So most families don't actually have to complete the full 108 questions, but it still takes a while. But the new FAFSA is going to be down to, as far as we know, 36 questions or so. So big simplification to the form. That simplification primarily is happening because there's no more self-reported income question. So on the current FAFSA, There's a question about how much money parent one earns. If it's a married household, then how much parent two earns. There's a question about the kids, your students. Do they earn money? And then there's an additional option where you could link your tax return to the IRS through something called the data retrieval tool, or DRT. And so the government basically has a way to match and verify if the numbers that you're reporting are in line with what the tax return shows when they're pulling it directly from the IRS. Well, all of those financial income questions on the new FAFSA are gone. There's no more place for you to record how much money you earn or your student. Instead, there's going to be a full integration with the IRS. So the moment you sign into the form, it's going to be automatically connected to the IRS, and it's going to pull the income from 2 years prior right into the FAFSA. You won't have to do anything, which is a positive for a lot of families, especially if you're, financially, maybe not savvy, you're not sure what the questions are. Also for first generation kids who may not have a lot of help from their parents, and their parents who went to college in a different country are just not familiar with financial aid rules in the US. And as a result, they often don't complete the form, or they make mistakes on the form. It's not their native language and it's complicated. So this is going to help those families a lot. But if you have a little bit of complexity in your finances, if you're a mid-income family, if you're a business owner family, if you own real estate, this actually might end up being kind of damaging because you don't know what the government is pulling from the IRS. We'll talk about this a little bit more in detail as well. But for now, just know that all of these self-reported income questions are gone. The form will automatically link to the IRS, and the form is going to be translated now to 11 different languages to make it more accessible and easier for families to complete. And then the third biggest change on the new FAFSA is that for all low income, and I would say very low income families, as well as independent students, there's also no asset disclosure. And that's if you don't have to file taxes, or if you have an automatic zero EFC, now it's going to be called SAI, or if you have a negative student aid index, or if you're an independent student, or if you're a parent whose adjusted gross income is less than $60,000 a year and you don't file these schedules. I'm going to make this a little bit bigger just so that you could see it. And take a screenshot if this applies to you. And you may want to do some follow-up on this, or if you have a question, you can drop it in the comment section, and I will get back to you. But basically, what this means is that a lot of low-income families and independent students are not going to have to even report what savings they have or what assets they have on the FAFSA. Instead, it's just going to get an automatic zero, and your expected contribution for college will be nothing, or if anything, incredibly low. So this is going to help a lot of low-income families, families living at or below the poverty line, and students who don't have a traditional home to live in. Getting financial aid from the government will be a lot easier for them. And I think that this is a huge and positive change, and big round of applause to the Department of Education in terms of simplifying the FAFSA. Unfortunately, the next section is going to be one that I'm going to hold back some of the applause because, these are either completely useless or in many cases negative changes that will actually hurt a lot of families that need financial aid and rely on financial aid to send their kids to college. So let's talk about what the Student Aid Index is and how it works. If you've been following my training, or if you have other kids that have gone through this process, then you're familiar with something called expected family contribution, or the EFC. Basically, the EFC is the amount of money that the government thinks you should be able to afford and pay for college. The government figures out your EFC by asking you to complete the FAFSA, which is the main financial aid form. The FAFSA collects your personal and your financial information. Things like your income, how much money you've saved. And then based upon those financial elements, as well as based on your personal reporting, like how many family members you're supporting, how many of them are going to be in college at the same time, and then goes through a calculation, and it calculates what your expected contribution should be for college. Now, the government figures out that EFC as a term is a misleading one because most families actually end up paying more than their expected family contribution, which is kind of crazy. Let me put something on the screen really quickly. It's the financial aid financial aid formula. I want to explain this really quickly. So let me put that up on the screen now. All right, there we go. So cost of attendance is COA. That's the total cost of attending 1 year of college. You can find this number by looking at any of the colleges that your student is looking at. It's on their financial aid website. You can also use a really cool website called collegedata.com. And if you go there, you'll be able to find all of the information you're looking for. So here it is, collegedata.com. Awesome website. Any college, put in the name, go to the third tab, which is, I think, the financial tab. Scroll down and you'll see the cost of attendance right there in front of you. So that's how you know the total cost of sending your student to that school. Tuition, room and board, books, supplies, all that is included. From that total cost, you subtract your expected family contribution. That's the amount of money that the government thinks you should be able to pay based upon your FAFSA reporting. And the result is the amount of financial need or financial aid that you need. And that's what you would expect colleges to give you. Well, unfortunately, most parents end up paying more because colleges don't give 100% of the need, or if they do, they will include loans as part of the financial aid award. And so for that reason, the government thought that that's a really misleading term, and they decided to get rid of it. And they decided to replace it with something called the Student Aid Index, or SAI. What does that mean for you? Not much. It's just a different name, same exact function, doesn't really change anything. And if you ask me, I don't think it's any less confusing than the EFC, but let's go with it. That's written into law. Now, it uses the same exact calculation. Everything is the same. The only difference with the Student Aid Index is that it can actually be a negative number. So, for example, if a family is ultra low income, they're below the poverty line, they complete the current FAFSA, their EFC could be 0, which effectively tells the colleges that this family is not expected to pay anything for college. But with this new index, they can actually have a negative number. That means a student could theoretically get more money from the financial aid system than the total cost of attendance, or they have an extra $1,500 to spend. So I suppose that's a really good change for some ultra low income families and those living below the poverty line. For most of us, it really just doesn't make any difference whatsoever. It's just a name change. I've already gone over the financial aid formula. Cost of attendance minus the expected family contribution equals your financial aid need. Well, now it's going to be just replaced with SAI. Nothing else is going to change. So let's now shift gears. And as we approach the tail end of our conversation today, let's talk about the winners and the losers, and also what is the timeline of these changes. Well, first of all, the big winners are going to be the low-income families as well as first-generation families. I've already talked about this a little bit before. FAFSA is going to be simpler. It will automatically link to the IRS. There's going to literally be no asset test, meaning you don't have to disclose your savings or your assets if you qualify for an automatic 0 student aid index, which means you're below the poverty line or have an independent student that is living alone. And it's also going to make it easier for these folks to qualify for the Pell Grant. And the Pell Grant itself is getting larger. It's about 66 or some $100 a year. So it's not a ton of money, but it definitely helps. And like I said, last year, and well, actually last several years, something like $2 billion has just remained unclaimed. And a big chunk of that was through Pell Grants that were there, available, waiting for someone to claim, and no one came. And the big reason for that, as the government did some studies, were really low income families, first generation families that didn't complete the FAFSA at all, or they made mistakes on the FAFSA, or they submitted it really late and basically missed the deadlines. Other winners are some unemployed families, especially those that might have been out of work because of a workers' comp claim, because of an injury. So under the current FAFSA, you have to disclose if you're getting any what's called untaxed income, workers' comp benefits, veteran benefits, or any other untaxed income. And the current FAFSA considers that income as actually being available to pay for college. So it increases your expected family contribution. Well, the new FAFSA is doing away with that. Under the new FAFSA rules, if a family member is getting untaxed income like workers' comp, veteran benefits, or something else, the FAFSA will not consider that money as being available to pay for college. You get to keep that money without it adding to your student aid index. Divorced families, well, like I said, sort of benefit for one main reason. Child support payments under the current rules in the present FAFSA are treated as as an asset. So let's say in a divorced household, one parent that has higher income has child support obligations. Well, if you're the lower income parent and you're receiving the child support payments, you have to report those on the current FAFSA, and the government will assess them or count them at 5.64% towards your expected family contribution under the new rules. Under the current rules, it's taxed up to 40%. So with the new FAFSA, receiving child support is going to help some divorced families because it's going to lower the amount of that income that the government is going to count towards your expected contribution or your student aid index. Well, on the flip side, there are a bunch of, unfortunately, losing families as well. And I think the biggest loss is for families that have more than one child in college at the same time. Because under the new FAFSA rules, you're going to lose the discount for your siblings or for their siblings. So let's just say, for example, you have a current expected family contribution of, say, $20,000 a year. That means that any college that your student applies to, they will expect you to come up with the first $20,000. And if the cost of that college is higher, they're going to expect to give you extra financial aid. Here's that formula. So if your EFC is 20,000, and let's say you have two kids in college at the same time, then effectively it's 10,000. That 20,000 EFC gets split in half. So the first college is only going to expect you to come up with 10,000 for the first student, and the second college will expect you to come up with the other 10,000 for your student. So it's 10,000 per, or 20,000 in total. Under the new FAFSA rules, if your expected family contribution is $20,000, just like in our prior example, you're going to be expected to pay $20,000 per student. So with two kids in school at the same time, you're going to be expected to pay double, $40,000. If you have three kids in school, $60,000. Now, this is really scary because if you think about an average family, let's say even living in a lower cost of living, standard cost of living state, let's say nurse and a firefighter, their expected family contribution can easily be $30,000 a year. So with two kids in school, that goes up to $60,000 a year. I don't see how an average household can possibly spend that kind of money when maybe their combined income is $150,000 a year. They're going to be expected to pay half for college. That's after taxes and before you get a chance to, pay the mortgage or rent or anything else and feed your family. So this is a horrible change. There are a lot of groups, ourselves included, that are writing letters trying to change this, but so far this is sticking. So you need to know about it. Let's talk about the second and third. So the second unfortunate losing family are going to be the divorced families. And even though you're getting that better treatment of child support, I think there's a bigger loss on the other side because every coin has two sides. Right now, under the current FAFSA, the parent that has to complete the form and report their income and report their assets is called the custodial parent. In case you didn't know, the custodial parent is the parent with whom the student spends more time. So if you have a 50-50 custody arrangement with your ex-spouse, the two of you can actually decide with whom the student is going to spend more time over the 12-month period before they complete the FAFSA. And technically, it's 50% plus one extra day. So as long as you can document that your student spent the time with the parent that has lower income and fewer assets, then that's the parent that, by definition, is the custodial parent for the FAFSA, not for anything else, just for the FAFSA, and you are the one that gets to complete the form, and you're going to get a lower expected family contribution. Under the new rules, that's going away. You will no longer be given the option to choose the parent with more favorable financial information to complete the FAFSA because the government, remember, automatically links the FAFSA to the IRS, and they will pull the information from the parent who's providing more financial support. And because, by definition, the parent that provides more financial support is the one with more income, automatically, divorced families are going to have a higher expected contribution or higher student aid index and be expected to pay more. There's some ways around it. I've recorded a couple of other Facebook Lives. I think we have that training on Facebook and YouTube, so you can search for it. I talk about ways that a divorced family can actually go around these changes by having multiple agreements, support agreements, but you can find that there as well, or drop us a comment and I'll talk more about it. So it's possible to go around this, but this makes it much, much more difficult for divorced families to get the financial aid that they need. The third set of families that really lose out are mid-income families because there's something called the asset protection allowance. Your expected family contribution or your student aid index, for the most part, is determined by your income. Assets count too, but at a much, much lower percentage. The income is the biggest contributing factor to the amount that the government is going to expect you to pay for college. Assets are the second biggest. So not long ago, about 10 years ago, you could shelter $52,500 from being counted towards your expected family contribution. That means you can have money in the bank, in some investment accounts, in real estate. That's money that you get to use without it being counted towards your expected family contribution. Well, that number has been shrinking over the last 10 years, and under the current FAFSA rules, it's down to $6,600, which means over that difference, the 38,000 or so, that's all going to be, or 40-some thousand, it's all going to be now accessible towards your student aid index. So mid-income families are going to have a much higher expected contribution than ever before. Again, I have training on this on Facebook and YouTube where you can reach out that talk about how to shelter more of your assets from being available for college formulas, and that way you get to keep more of your money and lower your EFC. But as of right now, if you do nothing, you as a mid-income family are going to lose out. So let's look at the timeline. Again, the rule was the new FAFSA goes available October 1st of next year in 2022, and it's going to start effectively applying to any student who's entering college in 2023. Well, now it's being delayed by a year. So the new FAFSA is going to come out on October 1st of 2023 for the following school year. Now, the one thing I want everybody to remember, because this is confusing, but you have to complete the FAFSA, or your student has to complete the FAFSA 1 year before starting college, which means it's going to be when they are seniors in high school, in the fall of the senior year of high school. And then every year for which they're going to want financial aid when they're in college. So most students are going to complete the FAFSA 4 different times, starting in the fall of their senior year of high school. So what this means is that any fresh high school freshman student that's going to be starting high school in 2021 will be completing the new FAFSA. So don't waste your time, your efforts, your energy on learning about the current FAFSA because it won't apply. Only learn about the new FAFSA. If you're a family with a high school sophomore, you got to learn both. Well, I should say sophomore, junior, or senior. You have to understand how to lower your expected family contribution for the next 1, 2, or 3 years. And then you have to also learn how to lower the student aid index under the new FAFSA rules for the remaining time that your student is in college. Oh, let's see. So which changes are going live now? That's the third bullet point. Even though the new FAFSA will not be available for 2 years, some of the changes in the proposed law of last year are already going into effect. And those are the 3. It's the repeal of the subsidized usage limit applies, which is that 150% time period. Now you can borrow from the federal government as many years as you are in college. Secondly, there's the repeal of the disqualification for drug convictions. And third, male students no longer have to register for selective service system as of this upcoming FAFSA on October 1st of 2021. So folks, these are the biggest changes. That's the timeline that we're now dealing with. The Department of Education has not released any other changes or the timeline for those changes. So let me walk that back a little. We know what the changes are going to be because they're written into law. We just don't know when they will be phased in, because the Department of Education said, we'll get all of this figured out by 2023 so that every student that starts college in 2024 will use the new FAFSA. All of the new rules will be implemented. The form is going to be different. The connection to the IRS is going to work, and all of the back end systems to make sure that you automatically qualify for the Pell Grant, all of that will work. At least that's the promise. But they didn't say at what point will these changes start to appear. For example, when will the EFC go away and SAI come into play? We don't know. When will the custodial parent definition change? And now it will be the financially supporting parent who's going to be required to complete the FAFSA. We don't know. What about mid-income families? We don't know. The one thing I can tell you is this. If your taxes have any degree of complexity where you want to be able to actually put into the FAFSA how much money you earn and then let them match things up, and if there is a disconnect, you can reach out to colleges and talk to them about it so that you don't lose out on the financial aid without even knowing about it. So if that's you, basically start figuring out, like on using this current FAFSA, how your EFC is calculated, how to negotiate with colleges if the information that they're getting is incomplete or incorrect, so that you do what's called the financial aid appeal and explain to colleges that your financial aid situation or financial situation is not as it might seem, and that you're in actual need of more assistance. And you can get money for that if you go through the process, but don't just let the system do all of the calculation for you, because, well, no system is perfect. And sometimes mistakes get made. Sometimes wrong information gets pulled. And you really want to stay on top of all of these changes so that you get all of the money from the financial aid system that you actually need to send your kids to college and avoid borrowing, avoid debt. You can get a lot of money from the financial aid system, from the merit based system, and from private scholarships to pay for your kids' colleges. Try not to wreck your finances. Try not to wreck theirs before they even get started in their life with a career. And so use the financial aid system. Unfortunately, it's not as simple as we would want it to be, but it's there. It works. It's clunky. It's out of date, but there's money. You just have to know what levers to pull in order to get it. So keep following the training. If you have any questions, drop it in the comments below or send us a note. It's Roman at pillar6college.com, and we'll do our best to answer your questions. Until next time, be well. Good luck to you all, and have a great weekend.